Hey guys, how you doing? Getting set up right now. Looking at Sunwin, SUNW, or Sunworks, my bad. SUNW is the ticker. It is going crazy today. It is up. We at 24%. My $400 trading account, I am up 20 bucks just today alone. Not quite sure what's going to happen right here, but I'm watching it closely. If you have any questions or comments, you can leave them in the chat box. I should be able to see them. Got that open right there. You can see we've broken out of the wedge that was forming. We are higher. I like that. Oh, now we're lower. It is just going to bounce around for a minute, I guess. Hopefully it does something here pretty soon. All right. Got a breakdown below. It's trying to break back above the false breakdown, hopefully. Share my stream real quick. Ooh. Oh man, what are we doing? Really, it needs to hold about 70 cents is what we're looking at right here. But I don't like the way this is going right now. All right. Sitting right about even right now. I can handle that. A little 5-cent gain on some fractional pennies here. You can hear some of my dogs in the background. They're playing around. I got 2 dogs. They like being annoying, especially when I'm live. Go ahead. Do some stuff here. See, I like this. Looking like it might be a false breakdown. Channel. My channel is momentum trading. Let's see. I'm attempting to share this. Share. There it is. Tweet it out. Share my stream real quick. And we'll go back here. All right. Let's see. Thinking. I think if you want to pick it up right here, that'd probably be a good deal. There we go. What we need is for it to break above these moving averages where it's just hanging around right now. Patience. The patience of trading is not really a fast moving exercise most of the time. Here we go. Looks like I'm trying to break through the 9-day. Edit my studies. Change the colors on them at least. Change the color. This is the 20-day. Like any of those colors. Go ahead and I will make it a reddish. Okay. Apply. see. Extend my trend line. Yep. You can see that it consistently bounces off about right there. So come on. Boom. 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 Like once this looks like I was looking at the wrong channel to begin with. Should have been looking at a support level that's probably somewhere outside of my chart. We will see higher or lower. What do you think? Higher or lower? All right, let's take a look at what the Dow is doing. Kind of where I spend most of my time. Oh yeah. Futures are down 200 points. Not surprised with the overnight with China. It's kind of a mess. Once again, boom. Sure. Let's see what white looks like. There we go. I can deal with that. Looks like some people are losing their patience. Got some volume coming up. Let's see if the buyers come back in. Looks like they are. A nice little price rejection at 70 cents right there, looks like. That's what it looks like if I do this. All right. Looks like we're losing some of the impatient people. It's a little volume spike right here. People lost their patience. Looked at all of this and they thought it was going down. Could have done it. Could still do it. But basically we are holding the open. The low at the open. Let's see. Should be getting close to our trend line again. Back above the 9, bouncing off the 20. Clean this up a little bit. Oh, yes, sir. All right. It's getting real close to time for something to happen. I like that 70 cent level to buy something. Looks like pretty good. Gets rejected pretty good each time. Damn it. Oh, earthquake in Indonesia. Son of a bitch. 6.9 magnitude. That's going to cause some problems. Just throwing in a quick order just in case it hits 70 cents. I doubt it will, but you never know. Pick up another 30 shares. Nice little bounce here, and it is through our trend line. Here we go. Failed. Stop. Another 20 seconds to see if it goes back. Six, 57, 58, 59, 60. New tick. Now. There we go. 4, 3, 2, 1. Close. New tick. Now, come on. Where you at? Somebody trade something. There we go. Took long enough. Just don't want to go above that trend line yet, do they? Not going to have much of a choice here in a minute. Excuse me. Take a look at what the Twitterverse is saying. Volumes are drying up. Something's going to happen. There we go. Oh. Yay. 49, 50, 51, 52, 53, 54, 56, 57, 58, 59, 60. New tick. Now we're above the trend line. Now it's really time to see what happens. Making money or losing money. That's going to get done. If it does, I probably don't want it to. Volume is 400 shares. It's not good, not bad, not really anything. A couple of buyers came in right there. Ooh. All right, let's see what we got. Can we Now we're getting some traders in here. Right meow. Take a look. Should have looked this up before, but I did not because I forgot. Not super heavy short interest. All right, let's go back. All right, so we're at the SEC site. Balance sheets for Sunworks. Current assets. It's like 16, call it 17 million. Current liabilities, about the same. Sales are down. Profits are up. Let's see. I'm going to pick up some more. Look at that volume. Trying to push against that trend line again. There we go. Above the 9, we're above the trend line. Let's see if we can hold it this time. What are we going to do with the 20? What's going to happen? Oh my God. Get so excited. 50, 51, 51. Oh. I don't like that spinner. I don't like it. It's getting there. It's getting there. It's trying. Come on. Get up there, you little fucker. Get up there. Do it. Do it. Do it. Get up there. Son of a bitch. Son of a bitch. Alright, what are we doing? Come on, you little bastard. Does not like that 20-day moving average today. Oh, there's a buyer. Nice. Shoot me a message if my video is coming through clear here in the chat box. Oh, are we starting the conference call? I believe we are. Well, that could help. Oh, it's about to get loud up in here. Say hello to my little friends. Duggies. All right, time for this guy to take a break. Oh, bird. going to get back above 70 cents? I think we might. Still want to find that earnings call. Did we just do it? No? Close though. Investor relations. Let's see, can we get on earnings call? Is that today? Yes, that's today. Always got to make sure. Accept. The event has passed. It's right now. Click here to register. I'm sure they're just going through the random gibberish that set the stock up between 10 and 25% so far right now. Sign up. I agree. Register. Sure. Play.
On driving higher margin project wins and then executing on those projects with effectiveness and efficiency. By doing so, we will deliver more consistent profitability and cash flow. We're also considerate of our capital structure and the importance of having financial flexibility. In the second quarter, we established a shelf registration, which provides us the ability to access up to $15 million in cash through equity offerings. In connection with that, we put in place an at-the-market, or ATM program, which allows us to sell equity shares of our common stock into the open market at our discretion. In essence, it provides us with an equity-based line of credit. Having access to this cash allows us a degree of flexibility that we've not recently had. It allows us to negotiate better payment terms, consider small strategic investments, and to ensure that we pay our suppliers, partners, subcontractors on time, even with some of our long gestation projects. We acknowledge that the equity shares create some dilution to our shareholders, but are confident that the advantages we accrue from the ATM outweigh the dilution. During the second quarter, we sold 1.2 million shares in total, which is less than 5% dilution. We will continue to utilize this vehicle prudently, keeping dilution very much in mind going forward. On a macro level, we're keeping our eye on the House and Senate legislation calling for a 5-year extension of the solar investment tax credit. Polling shows that Americans across the political spectrum are concerned about our changing climate, and they strongly support solar. A bipartisan group of senators and congressmen sponsored the legislation and are working with their peers to try and push it over the finish line over the next several quarters. In summary, we're looking forward to a good second half of 2019. We believe there's positive momentum in the solar industry in California and beyond. We believe that Sunworks is poised for continued profitability and further shareholder enhancement as we continue to grow our residential business, expand our relationships with strategic partners, diversify our business through geographical expansion, and focus on driving higher margin project wins and then executing on those projects with effectiveness and efficiency. With that, I'd like to hand it over to Paul to discuss our financial details. Paul?
Thank you, Chuck. And good morning, everyone. The second quarter of 2019 saw Sunworks again return to positive operating income, profitability on an adjusted EBITDA basis, and demonstrated that the weak financial results of the first quarter were partially a function of the seasonably wet weather and not indicative of the operational enhancements we have made across the organization. Installation revenue for the second quarter of 2019 rebounded from the low of $9.3 million in the first quarter to $18.7 million in the second quarter. The $18.7 million of installation revenue is a 6.7% decrease from the $20 million of revenue for the same period in the prior year. Non-residential revenue, which includes ACI and public works installation revenue, was about 70% of the total second quarter revenue, or $13.1 million. Residential installation revenue was 30% of quarterly revenue, or about $5.5 million. Cost of goods sold for the 3 months ended June 30, 2019 was $15 million, or a 12.1% decrease from the $17.1 million reported for the same 3-month period of the prior year. Lower construction costs offset the lower revenue, resulting in a gross profit of $3.6 million for the quarter. This compares to $2.9 million of gross profit for the same quarter of the prior year, or an improvement of $0.7 million.
Nice.
The gross margin was 19.5% in the second quarter of 2019, an increase from 14.5% in the same quarter in 2018. Turning our attention to operating expenses, our total operating expenses, excluding stock-based compensation for the second quarter of 2019, were $3.4 million. This reflects a 9.6% reduction from the same period of the prior year. Within our operating expenses, selling and marketing expenses for the first quarter were $0.6 million, or 41.6% below the second quarter 2018 level. The reduction in selling and marketing expenses primarily resulted from a reorganization of the sales and the sales support functions, lower commission and promotional expenses, and lower advertising expenses. We continue to refine our marketing efforts to align with more third-party revenue generators, as we also continue to improve our sales tracking systems. Our goal is to minimize customer acquisition costs while finding the optimal balance between third-party generated sales and in-house sales. Please keep in mind that costs associated with third-party generated sales are included in cost of sales above the gross profit line,
Nice.
contributing to our ability to reduce the sales and marketing expenses recognized as operating expenses below the gross profit line. Our second quarter of 2019 general and administrative expenses remained essentially flat compared to the year-ago quarter. Although the total dollars spent on general and administrative expenses is stable year over year, the composition has changed from the prior year quarter as a result of an emphasis on improving talent and using technology to improve construction management systems and processes, while at the same time reducing discretionary general and administrative expenses. Operating expenses, including stock-based compensation for the remainder of 2019, are expected to be stable compared to the prior years as we continue to streamline our operations and align our costs with our core operational objectives. Minimizing our overhead burden without compromising the ability to operate effectively has been and continues to be an emphasis. During the 3 months ended June 30th, 2019, we incurred $110,000 in non-cash stock-based compensation expense, compared to $800,000 for the same period in the prior year. In the second quarter of 2018, Sunworks recognized a one-time charge of $640,000 as a result of the retirement of the former chairman that triggered the immediate vesting of his remaining restricted stock grants. Additional reductions in stock-based compensation expense resulted from the 2018 departure of members of the board of directors and executive management, whose options ceased vesting, resulting in less stock-based compensation expense. Depreciation and amortization expenses for the 3 months ended June 30th were $91,000, down slightly compared to the same period in the prior year. Interest and other expenses increased to $219,000 for the second quarter of 2019, compared to $150,000 for the same 3 months in 2018. The increase in interest expense for the current year is primarily due to the $3.75 million promissory note from Crowdout, for which interest began accruing in May 2018, plus interest due for delinquent California sales taxes for prior year returns. The company incurred a net loss for the 3 months ended June 30, 2019 of $77,000, compared to a net loss of $1.8 million for the 3 months ended June 30, 2018. Turning to our balance sheet, our unrestricted cash and cash equivalents as of June 30th was $3.1 million, compared to $3.6 million at December 31st, 2018. As described in our first quarter conference call and 10-Q, our cash and liquidity positions were negatively impacted by our first quarter operating loss, compounded by demands from suppliers for deposits and strict adherence to payment terms for module purchases needed to support our backlog of projects scheduled for 2019 installation. As a result, we considered a combination of debt and or equity financing to provide greater near-term financial capability. Since our last conference call, we extended the maturity date of the Crowdout loan from June 2020 to January 31st, 2021, in exchange for 400,000 shares of common stock. We also filed a registration statement, as Chuck has said, on Form S-3, which became effective on May 31st, 2019, eventually allowing Sunworks to sell and offer to sell from time to time up to an aggregate of $15 million worth of common stock, a portion of which is being utilized for an at-the-market offering. As of June 30th, 1.2 million common shares have been sold using the ATM, resulting in net proceeds after issuance costs of approximately $0.8 million. Since June 30th, another approximately 2.4 million common shares are outstanding, resulting in additional net proceeds of about $1.3 million as of yesterday, August 1st, 2019. Our working capital shortfall at the end of the second 2019 was $0.4 million, compared to a working capital surplus of $3.8 million at December 31st, 2018. Working capital improved during the quarter by approximately $1.1 million compared to the end of the first quarter of 2019. $0.9 million of the $0.4 million working capital shortfall is due to the non-cash implementation of a new accounting pronouncement that became effective on January 1st that requires us to show the present value of future operating lease obligations as a liability on our balance sheet for the first time. During the 6 months ended June 30th, 2019, we used $1 million of cash in operating activities, compared to $5 million used in operating activities for the same 6-month period in 2018. The cash used in operating activities primarily was a result of the year-to-date net loss. The cash impact of the year-to-date net loss of $4.6 million is offset by cash received from the collection of accounts receivable, customer deposits, inventory reductions, and reductions in contract assets. Cash used in marketing activities does not include the cash impact of the at-the-market offering. As we discussed in earlier conference calls, we had a high level of inventory on hand at the end of the first quarter of 2018 as a result of the strategy of purchasing or committing to purchase solar modules prior to the enactment of the tariff on imported modules. Inventory balances as of the end of June have now declined to $2.1 million. That is a $4.5 million decrease from the record high inventory levels of March 31st of last year. Our total non-trade debt as of June 30, 2019 was $4.4 million, compared to $4.9 million at December 31st, 2018. The $4.4 million consists of the $3.75 million promissory note and $0.6 million of acquisition and financing. $0.7 million of the debt is current, and the remaining $3.7 million is long-term. After a start for 2019, we believe that our visibility into the next couple of quarters is reasonably good, and we have a solid backlog of projects scheduled for installation. We expect to generate revenue in the range of $18 to $22 million in the third quarter of 2018, generate positive operating income and cash flow. With that, we are now happy to answer any questions.
Thank you. And ladies and gentlemen, if you'd like to ask a question at this time, it is star one on your touch-tone telephone. Please make sure your mute function is turned off to allow your signal to reach our equipment. Again, ladies and gentlemen, if you do have a question or comment, please press star one on your telephone keypad at this time. Please hold while we poll for your questions. We'll go first to Philip Shen with Roth Capital Partners.
Hey guys, thanks for the questions. Chuck, I think you had mentioned on the conference call or the prepared remarks that you guys booked $7.2 million of resi sales in the quarter, but then the resi revenues recognized in the quarter was actually 5.2. So is it fair to say of your 17.4 million of bookings, implied bookings for Q2, 7.2 million came from resi, suggesting the remaining 10-ish million came from ACI?
Yeah, actually it's about 19 million was the new sales for the quarter. There were a few push-outs and cancellations if you're rolling forward your backlog. So it was almost 19 million in total, of which 7.2 was residential.
Got it. Okay. When you think about 2020, I believe this backlog is for the next 12 months. So when you think about how much of your availability remains in Q1 and 2, as well as back half of next year, how full do you guys look?
Look into 2020, the new sales that we are going to book in the second half of this year will be what fills the pipeline for 2020. So I think if you think of our business as residential on the one hand, and then the commercial and public works on the other hand, as you alluded to earlier, the residential is going to be the turn business. So it's nice to see the 7 million plus in new sales for the quarter. If we can start to see that as a run rate, then maybe you're looking in 2020 at 25 to 30 million of revenue that comes from residential. And then the rest of the businesses will come from the commercial and the public works. Most of the 47 million that we have will be second half revenue. So if we guided to 19 to 22 million in Q3, if Q4 is similar to that, then you would assume that we're going to burn through 40 million of the backlog in the second half of the year. So that's indicative that we need to be filling the pipeline for 2020 with the new sales that we generate in the second half of this year. Is that where you're going with the question, Phil?
Yeah, and how does that pipeline look for next year? Do you feel like it's a big funnel, if you will, so that, you know, what I'm trying to get at is, you know, what kind of growth we could see in 2020 relative to 2019 now that Resi seems like it's under better control, and you've spent a number of quarters retooling the team and processes. So, you know, this is not official guidance or anything, but I'm just trying to get a sense of your outlook for 2020. Do you expect to see some growth, or do you think it could be, you know, more flat?
We expect to see growth, and we are focused again on growing. I think you mentioned that we did spend a little bit of time retrenching while we improved our processes to make sure that as we took on new projects and new sales, that we'd be able to execute them effectively. I was pleased to see the execution in Q2. Gives me confidence that we can execute at higher levels. The team continues to get stronger, so I anticipate us being able to satisfy that. What I think you need to see is over the second half of the year, the new sales numbers, instead of being in the high teens, need to start to exceed 20 million, which means that the commercial and public works numbers need to be in the low to mid teens. So start to peak that over 20 million, and then we can start to see our way to revenue levels north of 80 million in 2020.
Great. Okay. Give me 1 second. That's helpful. Thanks. And then with that kind of growth profile, and well, maybe we'll talk about the back half of the year. How do you expect margins to trend in Q3 and 4? Do you expect to maintain this 19.5%? If not, you know, potentially improve upon them?
Yeah, we are focused clearly on improving the margins. The 19.5 was good for the quarter. We still have a bit of an anchor or a drag that come from some of the old projects. In fact, if you put it in perspective, our revenue in Q2 on the commercial side was from about 75 projects. Make up the total revenue on the commercial and public works side in the quarter. And there's about 4 or 5 of those projects that linger from prior periods that actually were a negative contribution. So ones that we're just trying to wrap up, that in the most cases we have wrapped up in the quarter. But there was about a $200,000 drag from those handful of projects that we wrapped up. And so if you say that we don't have bad projects going forward, or we minimize the number of bad projects, if we didn't have that $200,000 drag in the quarter, the margin would have been 100 basis points higher at 20.5%. So as we take on better projects and we execute better, there's no reason to think that we can't have that margin back over 20%, which is something that we used to talk about before. So with the higher percentage of residential, which carries margin over 20% already, and the avoidance of bad projects, I think our visibility to over 20% becomes a lot more realistic. So I don't think it'll be a step function change for Q3, but I also wouldn't expect there to be a step down either. So do we peak at over 20% in Q3? Possibly, but certainly we're going to stay in that range, I believe. And then as the projects weed out, then hopefully we'll get to that point where we can expect consistently to be over 20% gross margin.
Great. That's really helpful color. Thanks. Can you update us on the developing relationships that you're building with new home builders? Have you been able to lock down any new home builders, or at least get on their approved vendor list, so that you can serve as a source of solar for the new homes? Thanks.
Yeah, good question. We're certainly eyeing that. As you mentioned, it's going to be such a fruitful environment for us in 2020. the rules work in our favor for home builders having to make sure that all the new developments have access to solar. So we have been focusing on home builders. We have several that we're in advanced stages of negotiation with. We don't have any master sales agreements yet that I can talk about, but I am confident that with the focus that we have and with the work that Valerie and her team are doing, that we will get some benefit from that in 2020, but nothing that I can point to as a definitive design-in type agreement at this point.
Okay, great. I'll pass it on. If there's nobody else, I might jump back on, but I'll pause.
Right, thank you, Phil.
Thanks.
And Mr. Cargill, there appear to be no further questions in the queue at this time. I'll turn the call back over to you for any closing or additional comments.
Okay, thank you all for joining us today and for your continued interest and support of Sunworks. Please don't hesitate to reach out to Paul or myself or Rob Fink and the FNK IR team at any time if you have any further questions. Thank you.
Thank you, ladies and gentlemen. This does conclude today's teleconference. We thank you for your participation. You may now disconnect your lines at this time, and have a great day.
Useful information. Dilutive. Gonna be raising cash. Well, it is what it is. Businesses need to do that from time to time. Now let's see how the stock reacts. See if we can throw a trend line in here, see what's going on. Come on. So I'm down 9.2% right now. I can deal with that as long as it doesn't go any lower. My stop loss will probably be at the 64, significantly lower than when I started. Maybe a mistake, probably a mistake, but we will see. All right, am I back online now? All right, am I back online now? Oh, there we go. I'm working. Sorry about that. I didn't know I was frozen out for probably an hour. All right, good to see this is working again. Da, da, da. We got a nice little hit of volume right there. Buyers and sellers came together. Bollinger Bands are pretty tight though, so it doesn't look like it's going to make too much of a difference. It'll probably just bounce in this range for a little while. We'll hit a volume. Standing by, standing by. All right, what's the plan? What are we going to do? We are going to wait. I'm patient. All Gerard. Gerard. Puppy. No, down. 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 No puppies on the couch. There you go. That's good. No, down. Down. No puppies on me. That's a good boy. That's a good boy. You good boys. No, down. Down. Patience. Patience. You can probably pick it up right here. 69.2, 69.21. Bid ask for, yeah, pick it up for the 69.20. Yeah. Feel the Bollinger Bands are staying straight out right there. There's it's a little bit of a break, but it should probably come back up to the middle. If you got enough money to make a penny in between here and here, you can probably do it right now. And doggies again. I'll be back. Boys, we already did that today. Well, I was wrong. Wrong again. Sellers are coming back. Uh, what happened? Yeah, that is the 20. Okay. Still got support at 67. I like that. Gerard, in. Oh, excuse me. So I'm going to go ahead and close this out. It's not making the progress I thought it would. Maybe I come back to it tomorrow. So take a look over here. Z-HUD. Hooting Holdings, I guess how you would say that. $12.50. 3. I'll put my bid in at 11 cents. And I want to buy significantly more than that. Checked.